Good Monday morning. This is Joe. Ask Joe about money. It is February 27th, 2023, 5 minutes before the market open. And what we're going to do right now is we're going to go through and put in all of our important lines as the market is getting ready to open for the week. So the first thing that I want to do is let's go back to the regular trading hours. The market is actually not open yet. This was Friday's price action. So this was Friday's price action. As we have, the only indicator we have on here is a 20-period exponential moving average. So what I would like to do is go ahead and put in, that was Friday's high and Friday's low. And then we're going to put in Friday's close. So we have Friday's high. Why are these important? Because we trade price action, and we know that the traders were able to take it this low on Friday and this high on Friday, and that's where they closed it. So actually, if you notice, the open was down here and they closed it up here. So the open and the close were not too far away on Friday. But let's go ahead and indicate. I like to make these, and the reason why I'm going through all this today is because I got some questions on how do I set up my charts and get ready for the market. This is how I do it. So you're gonna be able to watch me do it exactly how I do it. We're gonna make that. Let's make that line. Let's make this the low. That will be red, and the close, make it brown. Cut. So now we have the high from Friday, the low from Friday, and the close from Friday. Okay. Now we're gonna go and we're going to switch over to a 24-hour chart. And the reason why we do this is we want to look at the overnight action. So the overnight action, let's see, where was the close Friday? Let's see what we have here. Yep, the close Friday was here. So we have, so if the close was here, the low of the overnight range was here. Okay. So the low of the overnight range was here, and the high of the overnight range is here. So what I do is I make them the same color as the prior day high and low. I just keep them thinner, and that's how I know which is which. So I'm going to make this, the high is going to be lime. Okay, see how that's thinner than that? So this is Friday's high. This is the overnight high, and I'm going to make this red, and we're going to keep that thinner. All right, so now let's see, what's the overnight range? So the overnight range here between 72 to 40.14, so that's about 30, about 45 points, so decent size range. I also think 50% is always an important number to me, because I'm not big on Fibonacci's. The reason why is because here's a Fibonacci, right? So Fibonacci is basically, you look at retracements. These are the popular ones, 23.6, 38, 50. But for me, 50% is not really a Fibonacci number. This is a natural number for the market to retrace. So I always like to look at, so 50% of the overnight range is going to be right here. That's 50%. All right, so it looks like we're getting ready here for it to set up. The market just opened, but again, there's no rush whatsoever. We're opening up on Monday morning. Now what I want to do is, now we have the overnight, we're going to go back to the regular trading hours. And now we're going to take a look at the longer term. Okay, you can see the market open up. We are gapping up today. So where are we longer term? So last week we had a bit of a sell-off. Let's go to the 60-minute. Let's go to the 60-minute. Again, just big picture, right? So big picture, this is going back all the way to April, okay, or March of last year. And this just gives us a big context. Again, it's not really relevant when we're doing our day trades, but now we zero in and see what has the market been doing. And so we see that the market went up here, and then we tested many times, it failed, and now we're back down here at support. We could draw in some trend lines here, and again, trend lines are never perfect, but It gives us a sense of, are we closer to support or are we closer to resistance? All right, so basically we sold off and now we have resistance up here. We're gapping up. Nothing to do with that specifically except for the fact that to just observe and just see what's happening. It doesn't mean that we have to do anything about it, but let's go back to the 5-minute chart. All right, so what do we see on the 5-minute chart? So those are our long-term trend lines. As we can see up here on Thursday, so on Thursday, what do we do? I like to always look at what was the price action last week. So on Thursday, we gapped up, came down, came up. And then we made a lower high here. And then we gapped down, and then we stayed in this range. Now we're gapping up. When we gapped up on Thursday, look what happened. So I always like to see, doesn't mean that's going to happen, but it could happen, right? Because it just happened 2 days ago. So this was a trading range. And now we're gapping here. But in order for me to be convinced long, we're gapping far away from the moving average. The moving average is 39.71. We're at 4,007. So that's what, about 40 points, almost 40 points. So for me to be buying, I would have to see big bull bars to buy this high above. We could certainly look for a short that's going to be to close the gap or back to the moving average. But again, we're not gonna predict. I'm gonna look at price action. So I know this could be a possibility today. We could actually gap up and sell off. That's what we did on Thursday. We could also, we're close to the highs of the overnight range here. So we could also go up and have a continuation trade to the upside. But we're gonna see. We are not going to predict, and we're gonna take our time. And another line I like to put in here, which is going to be the open of the week, because as the week progresses, this is going to be an important line. All right, so let's go ahead and just type it in here. This is the open week. All right, so there's the first bar. So the first bar closed. Okay, the first bar closed, and it was a bear bar. So what does that mean? Nothing really. We're just gonna watch to see. That was the first bar of the week. I very rarely take any trades in the first 30 minutes, even in the first hour, unless there is going to be 20% of the time, 1 day per week, we're going to have a trend day. And so during those times when it's evident in the market, depending on context where the market is opening up as compared to the prior price action, it may be a good spot to get in for a possibility of a trend. But so far, the context here, not very good for a trend, is because we're gapping up. Okay, we're gapping up. So far, bear bar. Okay, so how many bulls do you think are going to be buying up here? Not many, right? Because we're not seeing any convincing buying. Can that change? Absolutely. But right now, where are we? We have, what are the price action? What are the numbers that we have near us? We have resistance up here from last Thursday. We have the overnight high up here. Here's the open of the week. Here's 50% of the overnight price action. So those are the closest numbers that we have right now, but nothing to do. We have to wait, and we're going to see. All right, so we're 2 bars in, and so the first bar, bear bar. Okay, first bar, bear bar. And this bar looks like, was it a perfect doji? Can't even tell. Yeah, perfect doji. What does that tell us? That tells us that, so what happened is this went up, went down. And we could also look at this on a 1-minute chart just to get a better idea of what's happening. So on the 1-minute bar, this is what happened. The 1-minute bar, so sold off, came back up here. So right now we're in a trading range. Now we're buying at support. I don't trade off for a 1-minute. Again, it doesn't matter what chart you're trading off of. I trade off of a 5-minute, but this just gives us some more detail on what's happening. So this is trading range. So for the bulls, okay, this is not very convincing yet, right? This could also be a trading range open. So far, what we're looking at is a trading range. So we know that this was the high so far for the day up here. And we know that this was the low for the day. On the sheer fact that we're gapping up and we're not finding buyers, for me, it's opening up to the bear case because we're so far above the moving average. You would think that buyers would be stepping in, but the buyers stepped in pre-market. So are we out of buyers? Because remember, the market is an auction process. And so the market auctioned up. Now, are there buyers up here? So far, there are not buyers up here. How do I know? Where are the big green candles so far? Can that change? What if they go ahead and they put in a big green candle? Will that change things? Yeah, absolutely. So let's go ahead and do our mock green candle here. So we're going to be looking for a green candle. And let's see. I want to see what is going to be the reaction here. So we have the regular session high right here. We have the open right here. We have the overnight high. What is going to be the reaction up here? What if they put in a big green candle? All of a sudden, now that could change things, because now so far they didn't find sellers below here, and so far we haven't found buyers above here. So right now we're in this trading range open of the week. About a minute left on this bar. We're 3 bars in. Patience. Always patience. There's no rush. Never a rush. Remember, we get paid as traders to wait. I would say probably 70 to 80% of my time is waiting, which means I'm only in trades 20 to 25% of the time. Think about that, right? And I know I struggled with that early on, is because I'm used to wanting to do something, feeling productive. But what I'm doing right now is very productive, because I'm reading the market, I'm watching the market. And this is because one of those when you look back at the chart at the end of the day, what I'm looking for is those 1 or 2 swing trades per day. And just because the market's open doesn't mean so. Let's see what happens here. So far, they haven't been able to print any bull bars. So here we go. So now another bear bar.